Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. Hey yo, what a bounce in the last 3 days since our last video. Hope you all made some money as a bull. And now, let's look to make a little bit of money as a bear. So what we're looking at is last 3 days, there has been a 7.5% bounce on SPX. And look where we're rejecting from. So today is a very interesting day. What we're looking at is early on market open, before market open actually. There's a little bit of consolidation. But with the consolidation, because we actually didn't touch the GP, so the interesting part is we saw lower wicks. Lower wicks, and from there we saw going back up to that GP. Look where we're rejecting from, right from that GP, and did not close over the trend line. And now we're seeing after hours consolidation. I am anticipating this to be a stronger consolidation. We're looking at a relatively strong bear divergence here. So with that, we're gonna have to watch for where that daily higher low is coming in. A message that I shared, let's share with you guys here. A message that I shared in our chat room today. Let's see, so I slept in today because I was looking for sideways action with the message that I shared in yesterday's end of day. Let's actually cover that first. Market thoughts. Good dip. There's now 3 white soldiers. Generally, after 3 white soldiers, they are followed by some sideways consolidation before continuation. So expecting today, coming into today as a sideways action, didn't really. This is basically what happened today. But going into tomorrow, looking like Facebook reaction looks like it's going to be a little bit more bearish than sideways consolidation. Now, with this being the daily lower high, the possibility of seeing a new daily lower low remains. However, due to the 3 white soldiers presented, I'm leaning a little bit more towards unlikely scenario of the daily lower low, and we should know by the end of day tomorrow. So that's the message I shared to the chat group this morning. And what we're looking at now is, if you look on the daily, 1, 2, 3, and there's a lot of 3 white soldiers out there. You look at ETF wise, look at SOXL, look at Ying, YINN. Let's just pull them out as we talk about them. 3 white soldiers, Ying, 3 white soldiers plus another one on SOXL, and FNGU, 3 white soldiers as well. There's a lot of 3 white soldiers out there. BA, 3 white soldiers inside bar today. Those are reversal patterns. So what we're looking at from here is a daily higher low. Whether that's going to be 0.382, back testing that GG trend line, or if it's going to be 0.5 on that short-term resistance, multiple rejections in that area, or a GP short-term support. Those are the 3 key areas I'm looking at before coming back down for the potential of new lows. Now we're going to have to, the key to watch on this pullback is the volume. So with the volume, if we're seeing significant bear volume coming in, because on this bounce we did not see significant bull volume, that is going to be a red flag. However, if we do make new daily lower low, that could very well be the opportunity for some bulls. Whether it's going to be a bounce or long positions, watch for that. This next consolidation, higher low, lower low, whichever case it's going to be, it should be a good entry for the bulls. Now let's get into some individual tickers. We're going to do the same thing as last time. We're not going to cover any crazy individual growth names or whichever. They're all moving the same. They're relatively just a bounce. Most of them being about 20% to 30% bounces. PLTR, Sophie, AFRM, Hood. Actually, Hood had a lot more than 30%. Anyway, so let's get into the hottest tickers. First one we're going to cover, as always, is going to be a Tesla. And Tesla, what we're looking at here, what happened to my chart? Alright, guess I lost the drawing for Tesla, but whatever. Let's take this opportunity to do a brand new drawing. For those of you new to the channel, you probably haven't seen us do a drawing for a while. So that's the money line, most recent money line at least. Hey, that's a very nice bounce on the money line. Okay. Hey, this is why, for those of you that have seen the previous videos, you will see that I noted Tesla lost the money line, and this is why we want to redraw charts every now and then, especially for those of you who are new to technical analysis. Make sure to redraw your charts whenever you can. New perspective. So looking at this chart, this new money line, or this money line, has held. That was the key to buy. And if we're to draw, I thought there was a money zone. Anyways, we'll use this one. So bounce 1, 2, 3, 4, 5, 6, 7, and coming back to back test. 8 touches on this money line. Whew! 8 touches on this money line. This is the line to hold. Now with Tesla, as mentioned before, this is likely a 1, 2, 3, 4, 5 that's completed now, and we'll have to go to the monthly chart. Let's do 1, 2, 3 being the biggest leg, 4 and 5. Now look at where we are now. We are right at the monthly 8. This is still a monthly bull flag. We could see another touch of this money line before an actual reversal. So this month has just started. There is a lot of time left on this monthly bull flag to work out. So we could, as mentioned before, we could be looking at an extended run, an extended leg 5 run on this. As long as we hold this money line, I do not see any red flags on Tesla. If we were to touch this again, there can be some good returns. There is a slight bearish divergence on Tesla, but nothing too worrisome. Weekly is consolidating very nicely. There is a little bit of a key zone here. So depending on how you look at it, you could say this is the key zone over here. And look at where we bounced from, hey? Right from that key zone. What an amazing back test. What an amazing back test. This is looking a little bit like channel to me. Upper trend line not so clear, but definitely lower trend line for sure. So let's just draw the lower trend line here. Ooh, look at that confluence. Hey, I wish I had drawn this earlier. Look at that. Confluence, key zone, money line, long-term lower trend line. That was an amazing area for even just a bounce play. Anyway, so looking at Tesla, I would anticipate, based on the chart, we could see a little bit of lower prices come, touch this money line again before going back up. But as long as that monthly 8 holds, there is no real red flags. Let's see if there's a short-term upper trend line here. So because that's a wick, we're not going to draw it from there. And doesn't work. Not seeing a clear upper trend line. It's going to be somewhere around there. So there's been one fake out, a couple of fake outs. But this is going to be the key upper trend line to break. Tesla looking sideways, but there's good potential on it. Next one, let's take a look at Facebook. Almost said F. Yeah. Alright, so Facebook, this is what we're looking at. Potential for tomorrow is going to be a top watch. Facebook. Look at the after hour price and look at where we're gapping down to. After hours, 249 from the closing price of 323. That is a 23% gap down so far. And we look where we're gapping down into. Potential for the open. If we're to open here, this is right on the key zone. There is no fibs around it, so that's the part that I don't like about it. There is no confluence, but it is gapping down potential into that key zone. Gonna have to see where the chart opens up at. But if we were to open up at right at the key zone, there should be nice bounce opportunities on Facebook. Top watch going into tomorrow. Huge gap down. Huge gap left behind. We tried to hold that 0.382. Yeah, we tried to hold that 0.382. Bounce to the upper trend line, and look at where we're rejecting from today. Multiple rejections. Another one over here. another one over here, breakout, fake out, and then multiple rejections again, and another rejection today. Huge gap down. Oh, some nice opportunity coming up on Facebook. Google is up next. Congrats to Google bull swingers, whoever swung this. Oh my god, what crazy market volatility lately. Look at the gaps. This was for Google. I mean, percentage wise is not a whole lot, but for Google, 10% gap up. When do you ever see a 10% gap on Google? This gap straight up into new all-time high. And of course, there's going to be profit takers. You know, we're gapping up. Look at the 10% gap. People are taking profits, and the daily chart actually held up decently. We closed at 2960. Is that right? Yeah. We closed at 2960, but due to after hours, Facebook pulling the market down, and this is exactly what I mean, you know, when the chart's telling you that there's going to be a pullback, it doesn't matter what's going to happen, whether it's going to be news or earnings, and this is exactly why we focus on technical analysis. And Facebook pulling the whole market down. Is it though? Because you think about it, Google 10% gap up. It did not pull the market up. So Facebook, however, we'll just call it Facebook. We'll call someone to blame. Someone to blame is going to be Facebook. Facebook pulling the market down, and we're seeing new lows in the after hours. With this, there's a potential that we're going to see gap fill. Especially if the market is going into consolidation mode, I can very much see this gap fill before another bounce. However, the gap fill, the thing I don't like about it, okay, maybe there is a support there. I'll call it support. Somewhere around there. Resistance, support, chopped around again. It's not a strong support. So not a strong support by any means. It's going to be somewhere around here. Resistance, that makes sense. Yeah, so watch for this. Watch for the gap fill. Google, 20-to-1 split. I think that is an amazing opportunity for long-term investing. But as of right now, I don't think the entry from here is correct. It's not the most ideal, at least. So let's say if we were to pull back to that support resistance, where does it line up with fibs? Hey, would you look at that? As right where the 0.5 is. So if we were to bounce, even if we were to get the gap fill, slow and steady, maybe even fast and strong gap fill, this, and we start seeing a curl from here, Google is still going to be a strong chart. That is going to be a bounce from the 0.5. So watching for that on Google. Next is Amazon. Earnings coming up tomorrow. That will, I believe that's going to mark the end of the mega cap earnings. I think so. Anyway, so we saw along with Google, it had a big gap up today. However, it was very notably weak today. Throughout the whole day, nothing but sell pressure. Was it 30 minutes I was looking at? Oh, it was 30 minutes with extended hours on I was looking at. So it lost that 30-minute 8 right away. And then it just guided down through the whole day. All the way until end of day, there's a little bit of a buy up with no significant bull volume. You know, comparing to like day before, the closing bull volume higher than the bear volume. Day before as well, closing is the highest bull volume. But today, no significant bull volume. And after hours, we are seeing selling continuation. With this, Amazon, be careful on playing Amazon. I do believe Amazon's earning. Well, I'm not going to take a guess on the earnings, but I do believe there is something underneath the water, under the water, whatever the saying is. Don't like Amazon. Ever since Bezos retirement, I keep saying Bezos retirement, it has been nothing but weakness. We saw a bounce to new all-time high, and boom, straight shot down, breaking through all key zones. Amazon, don't really like the chart. We're not even able to break through this. So this is an increased momentum selling. This was the original trend line. And then we saw increased momentum trend line, upper trend line. And then now we're seeing another increased momentum to the downside on Amazon. So do be careful if you're playing Amazon bulls. Don't like the chart. I can see this accelerating market downside if that is going to be the case on Amazon. That's going to be top watch going into end of tomorrow and Friday. Now, last but not least, Apple. Hey, that's a completely different story. Look how strong Apple is. Would you want to be playing a chart going downwards, trending downwards, or do you want to be playing a chart that's trending upwards? We have not even lost in the after hours price action. We're down 0.81%, but we have not even lost today's low of day. So look at the chart. We're bouncing from that trend line, that previous upper trend line, a perfect back test. Earnings, gap up and continuation. Next day, saw another continuation day. In the last 2 days, now slowly forming a daily bull flag potential. Volume, decent. The only thing I worry about Apple is every single time, it tends to see a little bit of a bear pressure coming in post-dividend. And the ex-dividend date is coming up on February 4th. So looking at the last one, there's a little bit of bearish pressure after ex-dividend. Same with this one, very slightly bearish pressure. And this one, more, but it was in the downside trend anyways. So ex-dividend, we saw further downside. And then again, this marked the top of the bounce on this one and saw lots of follow through to the bear side. Even this one, ex-dividend, gap up, sell off, next day, sell off again. So that's my worry on the shorter term for Apple. On the ex-dividend, that's what we'll be watching on Friday. Going into Monday, see if there's a little bit of bearish pressure that comes in, which makes sense. People buy in for that dividend before the dividend, and then some people sell off after the dividend, right? So that's Apple, and is it? And that's it for the tickers that we're going to cover today. I'm going to keep it short. Keep it short, sweet, simple. Hope you guys enjoy. But before we end the video here, there is another thing that I wanted to bring up again. Look at where Dow is. So in relation to market, the relative strength, Dow is the strongest, breaking over that GP. Rotation continues. This is I am seeing potential rotation continuing into Dow, out of Russ, and maybe some Nas as well, Nasdaq. Russell, definitely the weakest. Looking at this, the bounce has only got to 0.382. The Dow got over the GP. The SPX is rejecting from the GP. Nas bounced to the 0.5. So Russ, weakest. Dow, strongest. SPX, so strength. And then Nas is in the middle of the pack. So with that, I do believe there is continuation of rotation into Dow. Now let's take a look at, let's switch it up and we'll do a quick, there's a lot of people talking about bears coming in, new lows in the market, consolidation, not consolidating, what is it, correction. Let's switch it up and talk about the leading indicators at the end of the video today and my thoughts on why I don't think that there is going to be a market correction, recession. Personally, I don't believe there's going to be a recession, at least not from what I'm seeing on the charts yet. There is going to be rate hikes, but market tends to price in worst case scenarios in advance. So keep that in mind. There is, depending on what you're reading, tomorrow seeing the big gap down, seeing potentially gapping down. So, okay, let's actually quickly look at this. Tomorrow on the open, if you're looking at SPY, which a lot of people, majority of the traders are looking at SPY as they don't know about SPX. So what could be happening tomorrow is we gap down and then a little bit of a buy up to gap fill and then continue to sell. What you're going to be seeing in the aftermath of that is a lot of people are going to be talking bearish again. Okay. They're going to, especially if we're to come back down, lose the support. So what I am thinking is, as people are talking bearish, market is already priced in the potential rate hikes with the last market consolidation. We talked about this head and shoulder potential. I was thinking that this right shoulder is going to drag out a little bit longer. This was not indicated, was not foresighted by leading indicators. It did not tell us that we're going to see a huge pullback like this. So when I look at this, now again, these are all just personal opinions. What I'm thinking is that this was a pullback due to market pricing in of the hikes potential, whether it's going to be, the pricing in 3 hikes, 4 hikes. Market tends to price in the worst case scenario. And from there, we saw a pullback of 12.4%. Without leading indicators telling us that there's going to be a market pullback. Now, let's take a look at where the leading indicators are looking at now. What we saw here is this key upper trend line, and it's oversighted by this bear divergence. This key upper trend line, weekly trend line, okay, where it used to be lower trend line, multiple bounces here again, and then another bounce here. And once we lost it, it immediately backtested. And look where we're rejecting from on the weekly. Reject a few weeks ago. Another rejection, strong rejection from here. And now there is a strong weekly bear divergence on this rejection. So with US dollars going down, that is bullish for the market. That's 1 out of 5 so far. Let's take a look at the next one. Next one is US 10 years. US 10 years. Potential for head and shoulders coming up. We're going to need to lose this neckline, but we are trending downwards. That is bullish for the market. VIX dropping. That is bullish for the market. Gold, we've already rejected. This is a little bit further a leading indicator. We've already rejected from that upper trend line. That's bullish for the market. Now we're seeing a daily bear flag forming. 1, 2, yeah. So give it another couple of days. Let's see if we reject from that 88. If we do, and the daily bear flag confirms, that's going to be very bullish for the market. The only concern that I have is now the Bitcoin. Bitcoin, we are seeing a rejection, a daily rejection from that upper trend line again. And this is a very key rejection because this is a money line that we're looking at before. Okay, multiple bounces, multiple rejections in this area, multiple rejection and bounces from this area. And another bounce over here. And now we're seeing a rejection over here and yesterday. Alongside that upper trend line where we have seen 1, 2, 3 rejections already. And yesterday was the 4th rejection from the upper trend line. Bitcoin, I do believe it's going to continue to be weak. And whether it's going to be a leading indicator going forward, that is debatable, and we're potentially going to remove it once that correlation starts to negate. If market turns bull and Bitcoin continues to be bear, we're going to start diverting away from using Bitcoin as a leading indicator. But as of right now, it is still working. We are seeing market pullback after a day of, actually at the same time, basically, no, a day ahead. So Bitcoin pulled back today and market is starting to pull back now in the after hours. So that's it for today's video. Hope you guys enjoy the content. If you know anyone that may benefit from the video we share, the content we share, please consider telling them about our channel. Hey, don't forget to give us a thumbs up and a like, a comment, whatever. Make sure to like our video so that other people can enjoy the content just as you did. Thank you for watching. I will see you guys in the next video.